Hello, this is Jordan. Welcome back to the Daily Gold YouTube channel. This video is being recorded on the afternoon of Friday, November 15th, 2024. Thank you so much for joining me. In this video, we're going to do a weekly recap for precious metals and look forward. And unfortunately, it was another rough week for precious metals. Looking at my sheet here, gold was down on the week 4.6%. Silver was down 3.2% on the week. GDX and GDXJ down 9% on the week. GDXJ fared a little bit better than that. And SILJ, the silver juniors, down 11% on the week. So it was an ugly week. However, if we look at the price action in the last couple days and some various indicators, it appears that the sector is setting up for a short-term rebound. However, I don't think that's the end of this correction. Could be wrong about that. We'll see. But I think moving forward over the days and next week or two ahead, I think the bias should be to the upside. So let's get to the video. So starting off, as we usually do, we have the daily candle charts for gold here at the top, silver here, and at the bottom here is the gold-silver ratio. So pay attention to the circles, starting with gold here. And I'm sorry, this photo looks a little small. I could have made it larger. But if you look at the last couple days, you do have a bullish hammer on Thursday. It's a clear bullish hammer. That doesn't mean the market is going to immediately go like that, but it does mean that you've put in a floor here. So close at 25.70, and these are the support levels that we've been looking at over the last week or so. This also came down to, I believe, the 100-day moving average, which is support in gold bull markets. So we should see a rally here. Should see some initial resistance here in the low 2600s. Maybe it could rally up to this point, 2650. You have the 150-day here. I apologize for not putting in the 200-day. The 200-day, I think, will come in right around here at the end of the year, end of December. So that's what we're looking at for gold. For silver, I mean, we can see here, again, clear bullish hammer on Thursday. Not the best candle today, but that's fine. It doesn't negate the bullish hammer. And even earlier this week, we did see some candles that indicated, there is some buying coming in. The market is trying to bottom. So silver in the past few days, I mean, I like the action there. A little bit better than gold. And we can see here, so silver held 30 for the time being. So if we're just looking at the daily chart, we're looking at what is coming in the next couple days or next week or 5 or 7 days. I would guess from this point we're likely to see higher prices, or at least prices not going any lower. Okay, so getting into the weekly charts, there still is damage here on the weekly charts. Gold here at the top, silver here in the middle, and at the bottom we have the silver weekly line chart. So looking at gold, this is where the strong support is. It's right around 2,500 to 2,550 or so. So gold did come down into that range. Again, closed a little bit off it. But this is not, these are not the greatest candles. So we could see a rally, but given the selling pressure of the last 3 weeks, that indicates we're likely to see more selling pressure after this bounce. SILJ, you have 4 weeks of distribution, or not SILJ, silver rather. And so this is not quite a bullish hammer. I mean, it almost is, but we would have needed to see a stronger rally. It didn't quite come down to this level right here, which is, I think, call this 29. Now you have the 200-day moving average equivalent, 28.67. So that's coming up. So again, this is a level I think silver will test. And looking at the weekly line chart, I mean, it just spells it out beautifully. I believe this is 29.50 or 29.40, this first level right here. Then you have really strong support at 28. And again, the equivalent to the 200-day moving averages here at 28.67. So, maybe you get a little bit of a rally like that, then you get more selling and it comes back over around here like that. I mean, that's one possibility. So again, very short term, looks good, but beyond this rebound, there still should be some selling pressure coming. Now let's get into some data, looking at how gold fared as far as corrections around all-time highs. I'm looking at what was the first correction after it had broken out to a new all-time high. So that happened 3 times. I'm not counting 2007, which was a little different than the other three. So you have the 1972 breakout, the 1978 breakout, 2009, and then, of course, 2024. And I'm looking at the gain from the low. Now, with respect to gold here and now, I picked 2023 as the low and not 2022, just because, it made the 22 low. I mean, then it rallied. It came, back pretty far, and it was just a year of basically no progress. So that's not bullish. That's not a bull market doesn't do that. So that's why I picked the 2023 low. Now, this here is a little different. In 1978, from the time to the low up into the first correction, it was about 26 months. And it had, this followed the 74 to 75, 45% bear market. So you had a huge gain, up to the, nearly, 100% gain, up to the all-time high resistance. Then it broke out, and then it had that quick 20% decline. And then after that, it was just all gravy. It was amazing. So this is data based on, or this was data leading up to 1978. So this data is different from here, and here. But this can give us some context as far as what's going on here and now. So here and now, it's been 13 months since that October 23 low. Gold is up 54%, which is not that big considering the first major correction, which is what we're showing here. And again, 2009, first major correction was 14%, 2 months. 1978, it was 21%, only 1 month. 1972, which I think might be the best comparison, it was up 102%. Correction was minus 14%. Now, in all these cases, this tested the 200-day, 200-day. In 2009, it tested the 150-day. And looking at this here, these corrections came before this one here. So these corrections, these two lows, they tested not quite the 200-day, but the 180-day moving average. So they came very close. And so gold right now, it's only corrected for 3 weeks. It's only down 9%. And again, the gain here is much less than all these other examples. But this one, before the 1978 breakout, market was up 50%. 7 months in, 11% correction over 2.5 months, tested that moving average. Then later, a year after that, it was up 84% from the low, corrected 12%. A month and a half is how long it lasted. So potentially these corrections could be a good comparison for where we are here and now. Now, if we had gotten to, like, let's say 3,200, around that level, then this would have been a really good comparison for where we are here and now. And I wrote about that, saying, well, if gold goes up to 3,000, a little bit above, it could be setting up for that correction where maybe it corrects 14%. It tests a 200-day moving average. So here and now, again, based on what happened here, these corrections would tell us we're only 3 weeks in. So these corrections would tell us that gold could potentially correct a little bit more. And, based on what I was just talking about with the price action, just looking at the price action, isolating it by itself, I think we are going to see more correction in gold. Maybe a little bit more as far as the downside, but in terms of time, it could last a little bit longer. So you could get some rebound, consolidation, that type of thing. So I know I'm just droning on here, but the point is, these are helping us kind of decipher what kind of correction we could have now, how long it could last. And so I think this one right here is probably the best comparison. Minus 11% over 2.5 months. So we'll see. So again, what that tells us, the correction could last a little bit longer as far as price, but also longer in terms of time. We're only 3 weeks into this. And this is just a big picture comment with respect to where we are. And this data is updated at the end of October, so it doesn't include the last few weeks. So we have gold here. Again, this is gold against the 60-40. Silver here, silver against the 60-40. And again, these lines are for gold. The second line here, this line here, that's when gold, the impulsive move began here and here. And we haven't seen that yet. I mean, we moved up a little bit. However, next month, we're probably going to pull back more than a little bit, based on how things are going right now. We should probably pull back a little bit. And we can see here silver against the 60-40. This is still basing and bottoming here. So we are getting to that point where I don't know how much longer gold and silver can go up without outperforming the 60-40 portfolio. Like I can't see this going like this and this going like that. And, we're at $40 silver and 3,800 gold. Like I can't see that. Like the next big move, I think, after this correction perhaps, will have to come when precious metals are outperforming the 60-40 portfolio. So that's my big takeaway, is that we don't have confirmation yet. We do not have confirmation yet. So without much of a transition, I'm going to talk about the Daily Gold Premium, my premium newsletter. And look, until we see this type of a move, you're going to see lots of juniors struggle. And that's just because not enough money is coming into the sector. Money is coming into the sector, but it's only buying the highest quality juniors and other companies. And so, again, until we get that confirmation signal, we really need to focus on the companies and the ones that can really outperform in a flat metals price environment. So those are the companies that I'm covering and focusing on. And, by the way, it's a correction. So if you miss these companies in the last 3-6 months, you have a chance to buy them lower now. So check out the Daily Gold Premium. Please consider subscribing. I'd love to have you aboard. Thank you for listening to this message. Now, let's wrap up the video talking about the gold stocks. And so here we have the 200-day moving averages. These are the simple 200-day, not the exponential 200-day. But look, the simple 200-day, look at GDX, look at SILJ, and we can see, they're basically setting up to potentially bounce from the 200-day moving averages. Now, not the greatest candle today, but, you had a good candle yesterday, and this is support. This is a confluence of support. This is a 50% retracement since the low here. Same thing with SILJ, 50% retracement. Now, GDXJ has been the strongest. That has not come down to the 200-day yet. It has not come down to the 50% retracement yet. If I could have put the 200-day exponential on here, I would have, and that actually is just like Thursday, that came within 0.5% of testing the 200-day exponential. So these are really oversold, and we are setting up for a rebound over the next week or two. I don't know if it's going to be a huge rebound, but we're setting up for a rebound. So that's all for this video. A little bit longer than normal, but thank you so much if you stayed until the end. Hope you guys had a great week. Hope you have an even better weekend. And as always, please leave a comment. Let me know what you think. I love to read all your comments. And hope you guys have a great weekend. I'll see you guys on Monday for Macro Mondays. Thank you.